Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, October 10th, 2023. Market continued to follow current analysis pretty cleanly today. I'm going to start here with the NASDAQ. I'm going to start on the 4-hour chart. I have been tracking and labeling a minor second wave. Just a very quick overview of that larger picture. We are currently working in primary C wave down, which will consist of 5 waves of intermediate degree. Waves intermediate 1 and 2 are complete, and intermediate wave 3 is in motion. And within that, within intermediate wave 3, we will have 5 waves of minor degree, of which again, minor 1 and minor 2 possibly being completed today. So again, 4-hour chart. Here's wave 1, A, B. We left off that we had this. We got into this yesterday. We drove higher. We finished right here at the moving average, the 4-hour moving average, and then took off again today, reaching our top level. Actually, we exceeded it by a little bit, by about 18 points. That our 1.618 for wave C came in at 15,365. And we also had 618 for the whole retracement and 1.618 for this C wave. So balancing it out, it exceeded, but then more importantly, what happened pretty much right after it had completed it, and you can see it right here, the market swung and started to reject the level, and it sold off pretty heavily. Now, I am going to bring it down real quick to the 15-minute chart because I want to open that up to show. It's like 1, 2, 3, 4. So we have yet to get back below 15,252, which was that low coming off of the high. So in other words, we reached the high, 1, 2, did a 3 down to here, and I'm still looking for a completing 5th wave so that off of that high at 15,384, I get 5 waves down. And I would like to see it, of course, on the hourly chart, but that's going to be a little bit more difficult. Sort of. So in other words, I get 1, 2, 3, and then this is kind of a diagonal or a wedging 4, and we get a thrust out of it at some point to put in that 5th wave. Now, here's the story behind all of that. If we get 5 waves down, then we're going to get a turnaround, and once again, we're going to do an ABC up. But our degrees now are back to being smaller. So we're looking for the development as this in a minor 3rd wave starts to kick off. We're going to have a minute degree. So this is minor 2. We're into minor 3. I'm looking for the development of minute wave 1 of minor 3. So again, we're going to just count down that clock to where we get to minute wave 3 of minor 3 of intermediate 3, which will be that point of recognition where we'll really see some what we would expect, or what I would expect to see there, is where we're going to get the largest part of the decline. So in other words, the acceleration coming down and coming out of that. Now, there are plenty of things going on, both economically with data due out tomorrow. Excuse me, I think is it tomorrow, or is it Wednesday, Thursday, or is it Thursday, Friday? Let me double check. I don't like to be wrong. Yes, tomorrow we have PPI, Thursday we have CPI, and Friday, Philly Fed, no, we have consumer sentiment, nothing really important, import price index on Friday. So we have PPI tomorrow, CPI on Thursday, along with initial jobless claims. So there are plenty of things to start to really tip this market and to start to cave. If we already have that pressure on interest rates, we already have that messaging from the Fed that their goal is still, to tame inflation, to rein it in, to bring it in. And even with last Friday's jobs data that we saw, plus last Tuesday, I believe it was, we had the jolts, which put a jolt into the market. So again, as we start to get an employment information, it might kind of balance out. But again, what we're now looking for is to see how is inflation on the producer level, so the PPI, producer price index, and then again on Thursday we get the consumer price index. Now, I've always found it a little bit strange in how they report the CPI because, you know, food and energy, they call it. They just kind of take that out. Why should we include that? A, because they're the most volatile. B, because that's where a lot of the inflation is coming in. And B, we have to go to the gas. We, the consumer, we're paying for that. So, but we're not going to tell you about it. We're not going to tell you that inflation is being tamed or untamed because we're going to take out the most two important factors of it. I've always had a problem with that, but who am I? In any case, we do have those reports, and I will say right off the bat that I do believe they will have a factor in direction tomorrow. So if those numbers are received and approved by the market, so in other words, received well, they're showing improvement in inflation, they're showing improvement in the producer price index. In other words, that it's not gaining, that is actually decreasing. And so we shall see. I believe from what I'm seeing, and I believe that they're looking for a little bit of an increase, which I don't think is going to be totally unexpected. So again, depends on how it comes in with the median forecast, et cetera, et cetera. So, but we have that. And if it comes out and it's showing things are actually not necessarily improving, but we're slipping and we're kind of going back in the other direction, well, then I would suggest that we get a fairly decent gap and we get that acceleration. So in other words, we start to move into even within minute wave one, we're going to get 5 waves of minuet degree, and we're going to get a third wave inside of that. So there are plenty of opportunities for prior to getting to the 3 of the 3 for third waves to kind of get things kicking off, get things moving. And if this is indeed, see right here, we have it. And just to show you on this hourly chart, here's the 1, 2, and here was the third. This is the 4. So again, you can see third waves can be like, whoa, come right out of nowhere, smash, wow, go right down because of direction right now. We also get third waves going up right here. This was a third wave when it was dynamic and it was just nonstop. Third wave. For the time factor, it was dynamic. And still, you know, we needed to kind of finish up. So again, that's into that. Now, I've added, let's kind of pull this back a little bit. I've added our fibs for the extensions for minor wave 3. And what we're looking at initially, minor wave 3 would be equal to minor 1, and that's at 14,119. Now, again, here we're going to start the conversation again, and we're looking at a third wave. Third waves are most often the longest and the strongest. That's what Elliott wrote and told us all about it. Therefore, I am looking for it to become longer, greater than wave 1. Here it's just equal. And so I'm always looking for that little bit more, and that pulls us down to 1.618. We also have, go back out to that 4-hour chart, and you're going to see where all this lines up. So what we have is we have intermediate wave 3 coming in at 1.618 of intermediate wave 1, and that brings us down to 13,498. All right, mind you, where we are right now. Where are we going to be? It's a big drop, but that's what lays out in front of us, and we're just entering that third. So I'm thinking that we're going to get below 14,120, 119 within minor 3. And so any extra that we get puts this minor third to be the longest wave out of the 1, 3, and 5 that we're going to be looking at to form intermediate wave 3. And being that it is the third wave, I'm looking for it to be even a little bit longer than that and possibly get us down to here. It could just really be a slider and pull us right below 14,000. And how many things are out there that possibly could do that? We can just continue to see, and again, I'm not saying anything what the market is doing or not doing in reference to a reaction that maybe people thinks that we should see because of what is now going on in Israel and how that is developing. And it is, Israel is at war with Hamas. The U.S. is moving ships in. We're getting conversations from other people about, Turkey's president of Turkey making a statement. Well, why would they be there? They have to be there because they're going to start attacking Hamas from this fleet that's being moved into place. It's all kinds of rhetoric and talk now starts to swirl around all of this. Will that have an effect? I don't know. But we do have enough things happening on a global basis and within our own country that could sour the investors or traders or whatever we want to call ourselves on their mood to stand up and continue to buy into an earnings season, which will start by the end of this week. I believe, let me just double check. I get my dates right. I don't want to get my dates wrong. And we're looking at they start on, I believe, on 16th. Let me just double check. We got the banks. Where are you, banks? Citi. When are you reporting, Citi? On the 13th. So this starts on Thursday. And Goldman Sachs, when are you reporting? And Goldman Sachs will be next week on the 17th. So Citigroup starts, and I believe it's Citi and maybe JP Morgan. Yep, JP Morgan on Thursday as well. So we have earnings that are starting on this week on Thursday. Friday. Oh, I'll get my dates right, I promise. On Friday, pre-opening, we've got the banks beginning their reporting. And I'm going to tell you right off the bat, I wouldn't suspect that any of them are going to maybe not blow the doors off, but I don't think they're going to be reporting anything too seriously wrong. I think they're all have great trading departments and probably going to report some pretty good trading. We'll see. So that kicks us off on Friday. So again, I'm looking for some from downside to kick in, going back down to that hourly chart. And right now we're just above the 20 moving average, 20 period moving average. And it's kind of stalled out right at 15,240, still heading up because we had most of the power during the day, and it's not really starting to crest yet. We have the 50 still heading higher, the 100 still heading higher, the 200, it always is the slow poke. But they're really all still lined up for continuation to the upside, I gotta just say. But I would expect we start to break that 20, we might get some acceleration. And again, that 20 is at 15,240. That's where it is as the market closes up for today. Again, we'll reopen in an hour, and that'll be in Globex. Same moving average will be in play then as well. And then we have the 50 at 15,140. The 100, again, the 50 is a simple, and the 100 is a simple moving average of 15,007. And then we have the 200 down at 14,933. We have been down here just last week, a week ago, or just not even. Last Friday, we were getting ready to push below 14,660. We did not, but then again, we just go back to a week ago tomorrow. So last Wednesday, we were touching 14,590. So we have put in a 700-point rally in the form of a minor second wave. So still holding to fibs, holding to these moves, being clean so far, and we'll see what can happen. If there's the possibility that we may still see some upside, our next resistance comes at 15,445, that being price. Fib-wise, I think we really are going to be getting up here to the 15,550, 60, and that would come in the way of 0.786. What wave 2 cannot do, it cannot exceed the starting point of wave 1, and that's right there, 15,850, cannot. If it does, something else is at work. I tell you this, I have alternate counts. I've gone over the alternate count, the one that springs back into my mind. I'm going to go quickly out to the 4-hour. I'm not saying that this is what's in force. There are some of you guys, I know you talk about it with me and you leave it in the comment section, and that is what you believe is in force. I think that's great. That's what makes a market, folks. That's what puts a bid and an offer on there on the screen, because one person thinks it's good, one person thinks they're willing to sell it. That's what makes a market. So if indeed this were to revert and be an ABC, there's a couple of possibilities it could be. One of them be, as I have on an alternate view, that the primary B wave is not complete. And it could be, believe it or not, it could be a minor wave 4. So I think it's rather large. And if I really pull it out to the daily, if I had to consider that this is minor 4 and here's minor 2, pretty large, which goes against it. Not impossible, but it goes against that being the case. Another case that it can be an ABC up, ABC X. That means that primary B wave is just going to hang out and gnaw us to death, probably to the end of the year. And because if this is the C wave stays in place, the B wave comes off, and this turns into an X wave, what that tells us is that, well, we have an additional ABC to do. So, because here's the first, you get an intervening X, and you do a second ABC. Not in any way, shape, or form does it need to be the same size as what we have just done. Alternate views, people, alternate views. Right now, I'm continuing to count it as an intermediate third wave, and we're dropping into minor wave 3. All right, over in the S&P, pretty much the same story, a little bit cleaner. I think the S&P is unfolding a little bit cleaner in terms of the depth and where we are. So on the daily, what do we got? We got above that 20, and it did, as I suggested yesterday, a nice clean break above is going to give us a little upside boost, and it did. In fact, that came in at 15,000, excuse me, wrong market, 43.75, or let me just get that right, 43.75 to 43.80, I think it was. And it just gave us a boost, and we got up to, bring it all the way back down. Let's bring it down to that hourly chart. Our top line here was 44.19. The resistance was 44.20, but actually we had a combination. We had a little bit of a zone there. 44.17 to 44.20. It came in, topped out at 19. I think actually 19 and some change. Nope, 19 on the nose. And then the same as in the NASDAQ, it turned, and like right at 2 o'clock, excuse me, 1 o'clock Eastern, we had a very strong hourly sell. And the market dropped, and then the market continued to pretty much produce red bars right up until the close, and we continue to see them now. Let me come down to that 15-minute chart, open it up. There you go. Kind of now going out pretty flat right here on the, as far as the bars go. But again, 1, 2, 3, 4, 5 turning into a diagonal, and it's got a lot of uglies to it. In fact, let me just kind of go over here and put it on a line chart. So we got 1, 2, 3, 4, 1, 2, 3, 4. Got a 5, maybe need a little bit more. So still working on maybe that first 5, and always that gets thrown in there. And if we get it overnight where we just sit basically to keep it pretty flat, it just elongates everything. Doesn't mean we won't get that additional little blip down, put in a 5, and then launch again in a bounce. So once again, what we're starting over, if indeed this is minor wave 2, the high for minor wave 2, then what we're looking for, I'm going to go back out to the hourly, things line up a little bit cleaner there. And for what I'm going to be looking for is the development of 5 waves down. No need to go over what's happening tomorrow or what's happening in the world. We just did. Same factors will affect this index. You can see here 1, 2, 3, 4. Now, difference is I probably can say that the 3 can get moved up to here, leaving this out of the picture again for a moment, and we move up to 44.59, which is the 618 for the minor 2. 2.618 was where the C wave would be 2.618 times the length of the A wave. So I could have done one more, and I'll put it up now just to see how this all kind of comes in here. 100%, where wave 5, excuse me, it probably could be the third, where wave 3 would be equal to 100% of wave 1. So that it builds up. Now I'm getting a little bit more compelling case. We may still have one more leg up in the S&P to do. As we see here, where the fib for this third wave came in at 44.15. Now we got above it, but we shall see. So I'm going to leave that possibility, as I just stated. I'm leaving the possibility that that is what will take place. And we'll come back up and retest where we just were, to be honest with you, and become maybe just above it. And then complete the pattern. And this 3 will go here, the 4 would go here, and we get a 5th wave up. Possibility of getting up that high, but does not necessarily have to do that. Just needs to get us back above 44.20. Could be 44.30, anywhere in here. Again, very determined. If it's still sitting in this area, when we get in tomorrow morning, 8:30 a.m. Eastern, we get the PPI. And we'll see what happens after that. Moving averages, same deal. We got the 20 sitting right there at 43.82. That is going to provide support if it's coming down. We do see here that these are the hourly 100 simple moving average crossed over the 200 simple moving average today. But that came late. So now kind of both going a little bit flat. We've got the 50 still pointing higher, but looking like it wants to crest. So that's the picture for the S&P. Not a whole lot more other than I'm still looking for that continuation to the downside. And once I get that wave 2, did I put it in? Let me just see. That is the 4-hour. I did not. But now I'm going to leave it off. I gave you the one but I'm thinking that maybe that third is just completing, and we still have one more rise up. If not, and we start to come down, if we start to break below 43.75, 74, and we're heading lower from there, we break that 20, it's going to put more emphasis on that that minor wave 2 is complete. And then I will draw the fibs for minor wave 1 up to the top of minor wave 2, and that'll give us the fibs coming off. Right now, for intermediate wave 3, we have 1.618 at 41.30, 2.618 at 38.42. Then we have primary C. It should find some support at 0.618, which is 38.83. So we have a little bit of a zone right here, which is where I'm looking for intermediate wave 3 to kind of finish its business between 38.83 and 38.42. All right, I am going to leave it right there for right now. Treasury markets were a little bit mixed today, so they're going to contribute to the confusion, I think. First, they kind of sold off, and then they bought them all back, and then they kind of, the 5, the 10, and the 2 started to drop down again, not significantly. And the 30-year bond was up way nicely above 112, like 112, 16, 17, 18 up in there, and gave that all back to close unchanged. All right, that's it for today. Next update will be on Wednesday, October the 11th.